Welcome back to Dollars and Cents for Women. In this module, we're going to set a foundation to understand our money by developing an income and expense statement. This module was adapted from the Family Economics and Financial Education Council and from the Take Charge America Institute. Let's get started. Let's meet Eve. Eve is a lot like us. She is paid once per month. She thinks she puts enough money in her checking account to cover expenses, but Eve runs out of money each month before all of her expenses are paid. Let's see how we can help Eve manage her money better. How does Eve think she is spending her money? Eve creates a list of her expenses. First, she allocates money to her savings account. Next, Eve estimates how much money she thinks she will spend, no more than $1,000. But she's still running out of money before the end of each month. Are you sure there isn't anything else you're spending money on, Eve? Well, I do purchase a cup of coffee almost every morning, but that's only $1, and I usually eat lunch at a restaurant about once per week, but I didn't think that added up to much money. Let's see how these expenses are affecting Eve's budget. One cup of coffee is $1 a day, that's $30 a month, and $365 a year. Now let's talk about lunch. Lunch costs about $8 a week. That's $32 a month and $416 a year. Eve wasn't including these little expenses in her spending estimates. Wow, small expenses do add up fast. So how do I better determine what I've spent my money on? One way to understand where your money is going is to use an income and expense statement. An income and expense statement is a document that lists and summarizes your income and expenses over a specific period of time, usually a month or a year. An income and expense plan is useful because it lets you see where your money comes from and how you spend that money. Once you understand your money, you can make spending plans that will help you manage your expenses and meet your goals. There are three components to an income and expense statement. First, income, the money that you bring in. Then expenses, the money that you spend. And last, net gain or loss. This tells you how much money you have left over. Let's learn a little bit more about each component. Let's start with income. Income is the money that you receive. There are three types of income categories. Earned income is money that we earn from working for pay. Unearned income is income received from sources other than employment. This could include gifts, interest from banking accounts, and scholarships that are used to pay for expenses. You may also be receiving income from government programs to help meet expenses. Some examples might be food stamps, cash assistance, Social Security, or disability pay. Let's look at the categories a little more closely. Earned income is income from money we get when we work for pay. This may include money from wages or salary before deductions, commissions, tips, or bonuses, or your tax return. Let's pause for a moment and talk about gross income versus net income. Gross income is the money we earn before taxes. Eve earns $1,600 before taxes. This is her gross income. We record this in the income section of the statement. Don't worry, we'll also find a place to record taxes and deductions, but we'll talk about this a little later. Eve's pay that is left after deductions is $1,277.60. This is her net income, the money that is available for her immediate use. Let's talk about unearned income. Unearned income is income received from sources other than employment. Some examples include interest earned during the time period you are recording, money earned from investments during that time period, money from sales of assets like houses, cars, etc., or any money from savings and investments used to help pay expenses using the time period we're recording. We only list savings and investments only if we actually use the money to pay for expenses. Other sources of unearned income could be from scholarships or grants from non-governmental sources, money from others, or child support. Money received from government programs is the last category of income. This income is usually temporary. Examples of this kind of income may include programs like workers' compensation or scholarships and grants from government sources. Now let's talk about expenses. Expenses are the money we spend. Some of the things you may spend money on are taxes, putting money into a savings or investment account, insurance, housing costs, transportation costs, food, and other things. Each individual has a slightly unique living situation. This means the way money is spent varies from person to person. Now let's talk about the most common expense categories. Taxes. Taxes are often taken from our gross income. This includes income and payroll taxes. You can find the amount of taxes you paid on your paycheck stub or pay statement. You may owe other taxes as well that you could put in other expense categories. Some examples are property taxes that can go in the housing expense category, or transportation taxes that can go into the transportation category. Sales and excise taxes are included in the purchasing price of items and are included with the costs of other expenses. Another expense category is savings and investing. Savings and investments include money saved or invested for future use. Some savings and investments may be deducted directly from your paycheck. Check your pay stub or pay statement for this information. Wait, we also have savings and investments in the income section of our worksheet. Are you wondering how savings and investments can be both an income and an expense? We count savings and investments as income when you use the money to pay for expenses. We count savings and investments as an expense when we are putting that money away for future use. Insurance is another common expense category. Insurance is a product that transfers risk from an individual to an insurance company or organization. Types of insurance you might be paying for include health insurance, property and liability insurance for your home or automobiles, life insurance, and disability insurance. Housing expenses are used to help us keep a roof over our head. Examples of these expenses include mortgage payments or rent, utilities like gas, water, and electricity, property taxes, money you spend to repair or maintain your home, or money used to buy household furniture. What housing expenses do you have? Transportation expenses help you get around. They are spent on things like loan payments for your personal automobile, fuel, license and registration fees, or repair and maintenance money, or money spent on public transportation fees like bus fare. Food expenses include groceries, meals eaten at restaurants, snacks, and kitchen supplies. You probably have other expenses too, like expenses related to caring for your family, communication expenses, some other expenses may include medical costs not covered by insurance, and expenses related to personal care, you may have educational expenses, or expenses related to caring for your pet. Don't forget to include things that you do for fun, as well as any debt payments, like credit cards or other loans. Also, if you give gifts or charitable donations, make sure you count those too. When you are creating your income and expense statement, you can customize the categories that represent all the income and expenses you have. The more specific your categories are, the greater chance that you will include all your expenses and your income. Wow, now I understand how an income and expense statement can help me determine where I spend my money. But how do I track my income and expenses to make this statement? Good question, Eve. There are many ways to track your income and expenses. You could write down your expenses in a notebook. There are also many apps available for smartphones to help you keep track. You can get and keep a receipt for every purchase you make. Bank account statements are another place to track your income and expenses. Or you can use a money management computer program. A written tracking system works better than a purely mental system. With a mental system, you can trick yourself into thinking you spend less than you do. With a written system, you are more likely to capture all of your expenses and your income. Now that we have all of our income and expenses recorded, we can figure out if we have a net gain or loss. To figure this out, subtract the total of your income from the total of your expenses. If you are left with a positive number, you have a net gain. If your calculation gives you a negative number, you have a net loss. If you have a net gain, that's great. That means you are able to meet your expenses and still have money left over. In future modules, we will discuss how net gain can be managed to further increase your financial stability. If you find yourself with a net loss, this means you don't have enough money to meet all of your expenses. In future lessons, we'll talk about ways to increase your income and decrease your expenses. An income and expense statement is a great tool. You can use the information on how you've managed your money in the past to develop a spending plan which will help you manage your money in the future. Remember Eve? Let's help her put together an income and expense statement. Eve has summarized the information from her March paycheck. This is Eve's only source of income. Eve has tracked her expenses using an app on her smartphone. Eve used her phone to track all her expenses. She was beginning to understand that she was spending more money than she thought she was. Now that Eve has collected all the information on her income and expenses, she can start putting it into categories on her income and expense statement. After Eve is done entering the information, she subtracts her income from her expenses and she finds that she has a net loss of $57.42. Now I have a clearer picture of how I've been spending my money. I have some decisions to make about how I'm going to get rid of my net loss. We'll continue to check in with Eve to see how she learns to better manage her money throughout the rest of the modules. Let's summarize what we've learned today. Income and expense statement is a tool that tells you where your money is coming from and where it is going. There are three components to an income and expense statement. Income, the money you get. Expenses, the money you spend. When you subtract your income from your expenses, you either have a net gain or a net loss. When tracking your income and expenses, there are many good methods to choose from. Choose what works best for you. Lastly, when creating your income and expense statement, you can use as many customized categories as you need to help you capture all of your income and expenses. own income and expense statement helped Eve understand how she is spending her money. Now it's your turn to create your own income and expense form. You can download the income and expense sheet from the Dollars and Cents module page. If you're using a spreadsheet program to complete this form, all calculations will be made for you. If you plan to print out a copy of this form to fill in by hand, make sure you have a calculator available to complete this form accurately. Don't forget to check out resources and tools that are available on the Dollars and Cents module page. We'll see you next time.